Welcome to the Fear and Greed Afternoon Report for Wednesday, the 15th of March, 2023. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the S&P ASX 200 rebounded somewhat from its big fall yesterday, closing up almost 1% to 7,069 points. The tech companies led the way down yesterday, and today they led the way back up, with the IT sub-index rising 2.4%. Healthcare stocks were also outperformers, while the consumer discretionary and energy indices both lost ground. About 3/4 of the top 200 stocks did well today. The banks were led higher by ANZ, which jumped 1% to $23.26. Commonwealth Bank was the laggard, down 0.3% to $95.03. CSL rose 1.7% to $283.78. That's a welcome turnaround for the healthcare group, which has lost nearly 10% of its value since the beginning of February. The energy companies were mixed. The retailers were generally better, and Telstra was up slightly. Gaming machine maker Aristocrat Leisure was down more than 1%, meaning it's lost about 9% of its value over the past week. Story number 2, Brent crude prices fell sharply today, down about 5% towards $77 a barrel. It's the lowest level this year and follows OPEC forecasts that oil supply could be in modest surplus next quarter, just as the US economy slows. What's it mean? Hopefully, cheaper petrol and diesel prices. Gold prices remain high, with an ounce of the precious metal worth around $1,900. Iron ore prices are also high, trading around 8-month peaks. That's good for Australia's big miners. And coal prices keep falling. They're now trading around $180 a tonne. The Aussie dollar is creeping back towards 67 US cents, while cryptocurrencies have also staged a comeback, with Bitcoin close to $25,000 a unit. Story number 3, the Albanese government has briefed other nations about the AUKUS submarine deal, including China. The government is treading a very fine line on this one, particularly since diplomatic relations between Canberra and Beijing have improved in recent months. China has been scathing of the $368 billion deal for Australia to buy 8 submarines, saying the US, the UK and Australia are going down a path of error and danger. Foreign Minister Penny Wong said Chinese officials took part in briefings on the deal this afternoon. Opposition Defence spokesperson Andrew Hastie pointed out that China is being a touch hypocritical, given it's undergoing the biggest peacetime military expansion since World War II. Mind you, it's not only China that's feeling just a little bit uncomfortable. Both Malaysia and Indonesia have said they're watching things very closely. But today, Fijian Prime Minister Sitiveni Rabuka, after meeting with Albanese, said he supported the deal. Story number 4, Australia's main financial regulators, the Australian Prudential Regulation Authority and the Australian Securities and Investments Commission, alongside Treasury and the Reserve Bank, today released a statement saying Australia's financial system remains strongly capitalised and highly liquid. That's good news. It's in response to the volatility for global banking stocks after the failure of Silicon Valley Bank in California. The Council of Financial Regulators, which includes the 4 agencies, said in a statement that APRA, in consultation with the Council of Financial Regulator Agencies, will continue to closely monitor the situation through its intensive supervision of the Australian banking system, which remains strongly capitalised and highly liquid. And finally, story number 5, US inflation eased last month but remains stubbornly high, and that isn't great for anyone hoping for interest rate cuts. The US annual headline consumer price index last month fell from 6.4% to 6%, while the core rate went from 5.6% to 5.5%. The headline rate was the lowest reading since September 2021, but core prices for the month of February jumped 0.5%. Which was the most in 5 months. It demonstrates the dilemma for the US Federal Reserve, which has made it very clear it wants to undermine inflationary pressures in the world's largest economy. When the Fed meets next month, it will weigh up stubborn inflation and a strong labour market against the collapse of the Silicon Valley Bank and the potential for that to flow onto the rest of the financial markets. Then it will make its decision on interest rates. That's it for the afternoon report for Wednesday, the 15th of March, 2023. Michael Thompson and I will be back tomorrow morning with the Thursday edition of Fear and Greed. I'm Sean Aylmer. Enjoy your evening.